Hey everybody, welcome back to Layman Loans. In this video, you're going to see how to pre-close a loan. What do you mean by pre-closure of a loan? You have a loan for a set tenure, that is, assume you're taking a 5-year loan. Tenure means the loan is going to be existent for 5 years. That is the tenure of the loan. That is the total time in which the loan is going to exist. So if you are willing to pre-close the loan, it basically means much before the total tenure ends, you're going to close the loan. So that is called as a pre-closure for the loan. Now, how do you do that? So let me illustrate with an example of a loan against property. So what is a property? It's an asset which is like a building which you have given for getting a loan. So that becomes a collateral for the bank, and the bank is lending money based on that collateral. To what extent they can lend? Usually they lend 50 to 70% of the value of the collateral. So assume you have a home or some property based on which you have taken a loan. And now if you are willing to pre-close that loan, what you have to do? Firstly, you have to go to the branch and ask for list of documents and the pre-closure amount for a particular date. So when do you do a pre-closure? Firstly, if you are looking to shift to one bank to another, then the other bank which is giving you a fresh loan, maybe you might take it with a top-up loan or with a higher amount, that bank will pre-close your existing loan and give you the additional amount. Or assume you have sold some property or you've got some savings matured, then you can possibly take that amount and pre-close your existing loan. For that, what you need to do is every month you are paying a small portion of principal along with the interest what you are actually paying for the loan. In the beginning of the loan, the interest component will be high and the principal component will be much lower. Assume you have taken a 1 crore loan, your EMI is 1 lakh rupees and you have taken it at a rate of interest of say 6%. Usually it is much more than that. Then what happens is for 1 crore, you are paying about 6 lakhs in interest. So if your EMI amount is about say 90,000 rupees, you are actually paying about 50,000 rupees. So for 6 lakhs is 1 year interest. So divided by 12 is about 50,000 rupees. So if your ECS amount or your EMI amount is 90,000, then 50,000 will be the interest component and remaining 40,000 will be your principal component. The higher the tenure you take, the lower will be your EMI. In the case of a loan against property or a home loan, we strongly advise you to take for a longer tenure loan with a availability of lesser processing fee and no lock-in period. What do we mean by less processing fee and no lock-in period? First of all, lock-in period makes you to stick to that particular institution only for that period of time. Even if you have the money, you will not be able to close that loan. Assume you are taking a loan for 1 crore with a particular bank and there's a lock-in period of 2 years. That basically means within the 2 years time, even if you have the money, you will not be eligible to close that particular loan. Only after 2 years, you can close the loan. And secondly, if you want to close the loan, what happens is you have to ask for the principal outstanding letter with the total amount payable. So when you are trying to pre-close the loan, what are the different charges you will get? Firstly, there is a high possibility of getting a pre-closure charge. That will be very clearly mentioned in your loan agreement itself. So the pre-closure charge can be anywhere around 1% to even 5% or more. So that means on the principal outstanding, they will charge an additional fee of 1% or even up to 5%, depending on the loan you have taken and depending on the institution in which you have taken. So assume your pre-closure charge is about 4% and your total principal outstanding is 50 lakhs. Then on top of the principal outstanding, you will have to actually pay 4% on the 50 lakhs loan. So for 50 lakhs, 1% is 50,000. So 4% is 2 lakhs. You will have to pay an additional fee of 2 lakhs plus GST for your loan in order to close it, because that is called as a pre-closure. But what happens with many banks is, if you're going to be a really good customer who's always paying your EMIs on time, you are a great asset to the banks. banks love genuine customers and they always want to retain them. What they will say is, they'll not allow you to even close the loan. They'll say like, we cannot give you the list of documents immediately. We'll give you a top-up loan. Why do you want to go to another institution? Why do you even want to close the loan? Let the loan exist the same way. Because you are a source of income for the bank. So banks usually don't want good customers to go out of their books. So for that very reason, they'll either delay the list of documents or the total principal outstanding letter which they have to give, or they might possibly give you a top-up loan and lure you to actually stay with that institution itself. First of all, always take the advice of the banker with a pinch of salt and think on your own whether you need the loan or not. Loans in the long run are always going to take a lot of money from your pocket and it's going to drain your savings, because you are actually paying a lot in interest and charges to the bank. Unless and until you are really calculative. There are really smart investors who play with these loans in a very, very beautiful way. What they do is, they'll take a loan for 3 crores, but they might have liquid cash of 3 crores, but they will invest on stocks or bonds which are giving them rate of interest of 12% or 13%, and they'll take a loan for 8 or 9% and take the interest from those investments and pay interest to the banks. So such investors do exist, but as you know, we are layman loans. All our explanations and all our illustrations are for layman people like you and me, who are not having a huge investment or huge backup. We don't have rich fathers, rich uncles to invest on anything we do. We are hardworking people who are trying to take things step by step, trying to improve our lifestyle. So these sort of tactics cannot be employed by us that easily because we are not cash rich. For that very reason, you have to always try to close your loan if you have enough funds. Go and apply to the bank and try to negotiate with the bank to reduce the pre-closure charge. You always have the ability to ask and negotiate with your banker to either totally evade the pre-closure charge or reduce the total percentage of pre-closure charge. On top of it, try to ask them to dispute the principal amount outstanding and the list of documents, and you have to go with the check for the exact amount on a specific date. So the principal outstanding what the bank gives is for an exact date. So assume you want to close your loan on say 13th of September. You have to go and actually go with the exact amount for that particular date on September 13th and close the loan. If you are actually trying to even go after 3 or 4 days, what happens is the interest component will change and the actual principal outstanding along with the interest will change, and you will have to pay a separate amount for that. So the moment you try to close a loan, decide the date, ask for the principal outstanding amount for that particular date and go and close the loan. If you want any assistance in getting a loan or closing the loan or getting a top up for a loan, you can always feel free to reach out to us by filling up the form given in the link in description and comments. We'll be more than happy to connect with you all.